Hi, my name is Paul, and during this session, we are going to discuss prorated percent eligible, what's it for, and how to arrive at it. Our goal for this session is to help you learn how to calculate the prorated percent eligible for your business or your nonprofit that has faced closures because of COVID-19 related reasons. The prorated percent eligible rate helps you offset the payroll costs during the times your business or nonprofit was paying salaries to employees, even though you were forced to close or reduce your business hours because of COVID. Please be sure to review your program guidelines to ensure that you're eligible to request reimbursement for these types of salary reimbursements. So in Submittable, you are going to come across a section called Closure and Reduced Hours Documentation. And it's going to ask you, did you have multiple periods of closure or reduced hours? If the answer is yes, you're going to see a text box that asks you to list the date ranges for each of your closure or reduced hours for each of those periods. If you say no, you're going to get a request to have a date for the start date of your business closure or reduced hours or your end date. And again, this is the same for nonprofits or small businesses. In this case, we're going to assume that we are a restaurant, and we're going to assume that there was reduced hours starting on April the 1st, and those reduced hours ended on May 15th. Again, this is just an example. And you can provide an explanation. Maybe you mention stay-at-home order, and then you provide other details. Please be descriptive. Okay, and you'll see this example from reduced hours training. In order to calculate your prorated percent eligible, there's a certain way you have to enter in the numbers. Please do not enter your actual hours. That's not going to help calculate the rate. What you need to do is you actually need to calculate the normal hours for that period where you had reduced operations. So what were the normal hours in this case from April 1st through May 15th? What would the normal hours have been? And then what were the actual hours for that period of reduced operations? And that's what you'll need to calculate. And then you'll end up with a number. So let's say, and for this example, our normal hours for reduced operations, let's say it had been 400 hours. And then let's also say in this case, the actual hours, we actually were only able to be open for 300 hours. Okay, so what that did was that calculated the prorated percent eligible of 25%. And this is important because this is how we're going to fill out our salary reimbursement spreadsheet. And you'll see right here the prorated percent eligible box in your salary spreadsheet, and we're going to click 25%. There you go. Now we're going to go ahead and walk through your salaries worksheet. And your salaries worksheet will look like this. This for either the small business program, this is an example from the small business grant program, or the nonprofit program. The fields are the same, slightly different language, but the fields are the same. So this applies either way. If you recall, in Submittable, we went through and calculated the prorated percent eligible, and we did it here with a casual dining restaurant that had reduced hours during their period of April 1st through May 15th. The typical number of hours would have been 400, but it was actually only 300 hours. So our calculated prorated percent eligible is 25%. So we went ahead and typed in 25 here. And so for this case, again, it could be a nonprofit, it could be a business. We're going to call this Jane's Casual Dining. And the contact name is Jane Doe. And what I want to start off is showing you that the spreadsheet has been locked in certain ways. So frankly, the formatting can't mess up. So if you click on here, you can't actually change the formatting of these blue fields. You can't change the names. You can change certain fields, and anything below the blue headers, you can actually input data into. I should also mention that if you see a little red triangle here, hover over that. That gives you more explanation of what you need to do in that field. And a lot of these fields use data validation just to make sure that data comes in the right way. And what you're going to do is you're going to complete this worksheet. And as you complete it line by line, a few things are going to automatically be generated. This line item total will be automatically generated, and your salaries will automatically be generated here. And when this reimbursement form is complete and there's no more red cells, you're going to transfer this dollar amount to Submittable in the salaries requested field. You should also note that there's some black cells here. This is for our team of reviewers. You do not need to worry about this. So let's go through some examples here. The salary spreadsheet, there's a number of different ways you can enter in and be reimbursed for employee expenses. So we're going to go through a couple different scenarios. Again, this is Jane's Casual Dining. For the first one, we know that the business hours were reduced in April and into mid-May. And so we're going to do some payroll periods here. So the date paid, and we're going to assume that the first employee is Johnny Doe. Was this a new position hired for COVID-19 response? No, it's not. Johnny is an existing employee, so I'm going to hit no. And you'll notice when you open fields that certain other fields, or you type in a field, certain other fields become red. And that either means there's a mistake, or you just need to make sure you fill it out. Our reviewers will need to see it. So this position was not hired for COVID-19 response. Johnny was an existing employee, and his actual pay for the period, we'll call it $600. Okay. It also asks, what was the normal pay for the period? So the normal pay, Johnny was paid $600, and that would be his typical rate. And this is the sort of thing you will want to show documentation for and submittable. The proof of expense type, we're going to say it's a payroll stub. And this is where we're going to start using the prorated percent eligible. So the number of days in the payroll period. Well, we're going to assume it's a monthly payroll period. In many cases, it might be a week, 2 weeks. But in this case, we're going to do 1 month. So we're going to say that there's 30 days in the payroll period. And the number of days that Johnny's payroll overlapped with reduced business hours. Well, we know that the business had reduced hours from April 1st through May 15th. And so the number of days that overlaps is all 30 days. Now, I want to show you what happens here is this field is automatically calculated, the pay during the reduced business hours. And there's an explanation here, but what's happening here is we're taking Johnny's normal pay of $600, and the entire period was a time of reduced hours. And then we multiply that ratio by 25%, and then we get his pay during the reduced business hours is $150. And so because of this, the $150, the line item total is automatically generated as well. You cannot change this. And you've got $150, and it also sums up to the grand salary total. So Johnny continued working into May. He was not a new hire for COVID purposes. He got $600, he earned $600 again, and the normal for that period was $600. We had a payroll stub. There's also, let's just say there was 30 days, you might say 31 days, but we're gonna say 30 days in this pay period. But the business closures, if you recall, were only through May 15th. Just, we're gonna go through here. We indicated that the business reduced hours was only through May 15th. So we're gonna go back here, and rather than 30 days, we're gonna say 15. Because the overlap was only 15 days, the actual pay during reduced business hours is less. We take the ratio of the overlap times the normal pay for the period times the prorated percent eligible, and we get $75. And this is automatically generates a line item total, 75 over here, and you add 150 plus 75, and that equals 225. Let's say that Jane had to hire a new employee to really focus on like COVID preparations just to make sure that the restaurant was meeting all COVID requirements. And so there's going to be a new employee, Jerry Doe. Is this a new position hired for COVID-19 response? Yes, and this person was specifically for cleaning and doing some COVID eligible activities. And also the actual total pay for that pay period was $300. Now notice there's no red for the normal pay because this is a new COVID position hired. There was no pre-existing position here. If I actually click $300 here, it becomes red because if it's a new position, I shouldn't have normal pay for the period. So I'm gonna delete that 300, and then everything becomes white again, which is good. Jerry was paid with a payroll stub. The number of days in the payroll period, that doesn't matter because we're not focused on the normal pay for the period. This is about a new employee, so you can just leave that blank. And you'll see that the pay for new hire was automatically generated $300. It took that $300 from here and automatically generated. I can't actually enter in data here, but if I adjust this, if it was 200, that goes to 200. But for this purpose, we'll say it was $300. And the proof of payment type, we need to make sure we do this. So proof of payment type, let's just say we're doing a bank credit card statement. I'll copy and paste. And you'll want to have a proof of payment that you upload into Submittable. We're just going to do some plug numbers. So 1234, 1235, 1236. Obviously, you'll want to use the actual numbers. But you'll see that Jerry's pay was automatically moved over here into line item total, and it was added to the total. Now, let's say we had other existing employees who were paid during this period. And by the way, this date period, if you enter something that's outside the time frame, it's not going to let you do that. So if it's outside of 2020 in the COVID-19 time period, it's going to give you an error message. So make sure you put it in the right time period. So we're going to use this as the April 30th date So this is going to be Jessica Doe. And is this a new position hired for COVID-19 response? No, Jessica was a previous employee. Her pay was $800 for the period. Her normal pay was $600. We're going to change the date here, actually. We're going to move this to June 30th for this purpose. So this is the month of June. And her normal pay is $600, payroll stub. Now, and for this period, since it's the month of June, there was no overlap with that closure period of April 1st to May 15th. So we are not going to complete the payroll period. This only applies to reduced business hours. So we're not going to complete this. But in this case, we know that $800, actually $200 of that was actually hazard pay. And there's definitions you should be aware of for hazard pay. But let's assume that Jessica was asked to kind of go above and beyond, and there's some hazard involved. So she was paid an additional $200 for the hazard pay. And so while her normal pay wouldn't be eligible for reimbursement, that $200 in hazard pay would be. And so you can see that that $200 was brought to the right. So bank card, credit card statement, we'll do another plug number for proof of payment. Okay. And then let's finally, okay, we had one additional employee, Joseph Doe. He was not a new position. He was already there. Let's say he also received $800. His normal pay was $600. But the reason he received more than his normal pay was because he had to work additional hours. Maybe there was additional cleaning that was required, or some COVID-related activities that required additional hours and thus additional pay. This pay from additional hours also goes to the right. So there's $200. And all these line item totals are totaled up here. So that is how you complete the salaries worksheet. Thank you.